Welcome to the deep dive. We're here to, cut through the noise and get straight to the stuff that matters so you can be really informed. Today, we're tackling something, well, it's complex, but just incredibly crucial. The whole evolving landscape of support for our nation's veterans. We're going deep into everything from really key updates to VA home loans, all the way to the massive scope of the VA's budget. We've spent time with sources like a detailed letter from the Mortgage Bankers Association. We've dug into the brand new VA Home Loan Reform Act of 2025 and really gone through the huge U.S. Department of Veterans Affairs FY 2025 budget submission. It's a lot to take in, but our aim here is to sort of boil it down for you.
Yeah, absolutely. Our mission really is to help you navigate these, let's be honest, pretty dense documents. We want to pull out the most important bits of info and hopefully equip you with a really solid understanding of what's actually going on. We'll hit some surprising facts and, what it all means practically for veterans and their families.
Okay, let's get into it. We're starting with what feels like a really major shift in VA home loans. For some time now, a lot of veterans have been facing real challenges with mortgage delinquencies. It's been a serious issue, and, well, we've seen attempts to fix it before.
That's exactly right. I mean, think about this. As of the end of 2023, December 31st, you had 74,370 veterans seriously behind on their mortgages. That's a huge number. And it led the previous administration to bring in something called VASP, the Veterans Affairs Servicing Purchase Program, back in 2024. But that program, well, it got a lot of flack, the criticism because it tried to go around Congress, and frankly, people worried it could undermine the VA loan system itself. The idea was the VA would buy these delinquent loans at a fixed 2.5% interest. It felt like a temporary patch and, yeah, raised questions about, the long run.
Right. Which brings us to the new solution.
Right.
Just signed into law July 30th, 2025 by President Trump, the VA Home Loan Program Reform Act, H.R. 1815. And what's really kind of striking here is it passed unanimously, both the House and Senate. I mean, these days, that's almost unheard of. What does that signal?
It signals a really strong bipartisan agreement that something needed to be done to protect veterans from foreclosure and, critically, to find a more sustainable way forward. So the heart of this new act, the really key piece, is setting up a permanent partial claim program. This is super important because it lets eligible veterans push back, defer, up to 30% of their missed mortgage payments right to the end of the loan term. And crucially, this deferred amount. No interest accrues, none, and no monthly payments on it until the original loan is done, paid off, refinanced, or just naturally ends. People are generally saying this is a much more sustainable approach, and it lines up better with other federal programs like the FHA's. It's meant to be a real lifeline, not just another burden.
Okay, so that's the core. But the bill also talks about a loss mitigation waterfall. What exactly is that? How does it help someone struggling?
Think of it like a checklist almost,
Yeah.
a mandatory sequence of steps that lenders have to go through. They have to offer specific, structured relief options first, before they can even think about starting foreclosure. It's designed to give veterans every possible chance to keep their home. Plus, the act also pushes more funding towards fighting veteran homelessness, specifically expanding the Grant and Per Diem, or GPD, program for transitional housing. And sort of on the side, it also cements flexibility in how buyer agents get paid, aiming to help VA buyers compete better in the market.
Now, getting a bill through unanimously, like you said, that usually means a lot of back and forth, right?
Yep.
Compromise. The Mortgage Bankers Association, for example, I know they had some thoughts, maybe concerns about earlier versions. What were their main issues? How did that shape the final bill?
Yeah, that's a really important piece of the puzzle. The MBA, they definitely weighed in. They wanted to make sure the final bill was practical for lenders, but, still really effective for veterans. So one thing they flagged early on was a proposal for a required repayment plan. The idea was veterans might have to start paying back that deferred amount within a year, maybe even with interest. The NBA argued, look, that's going to be tough for veterans just getting back on their feet. It could hurt affordability, even push them back into default. They actually had data showing those kinds of plans often have the highest redefault rates. So they pushed for what we see now defined the partial claim, more like a secondary non-interest-bearing payment, kind of like the FHA does. Another point was how the initial draft defined the partial claim, basically, like the VA was buying that delinquent debt. The MBA worried that could mess with lender credit losses, maybe impact pricing for Ginnie Mae securities down the line, and ultimately make it harder to offer affordable loans to veterans in the future. So they really advocated for the bill to clearly say the VA's loan guarantee isn't used to fund these partial claims. They also pushed back against an earlier cap, I think it was 20%, on the partial claim amount. They felt it was arbitrary and put veterans at a disadvantage compared to other borrowers who often get up to 30%. And frankly, less than veterans themselves got during the pandemic relief efforts. So their push helped get that higher 30% cap we see in the final law. And lastly, they were a bit cautious about locking a mandatory sequence of loss mitigation options directly into the law. They worried it might force servicers into offering things that weren't actually viable in every situation, potentially adding costs or limiting credit access.
Wow. Okay. So a lot of detailed negotiation clearly went into this. It really shows how complex these things are, but also, like you said, how crucial it is to get the details right. So boiling it down, what's the biggest practical takeaway from these changes for a veteran who would be struggling?
The main thing, I think, is that the final law gives veterans a much more flexible and hopefully sustainable way out of mortgage trouble. That permanent partial claim program specifically offers a clear path to dodge foreclosure, deferring a big chunk of debt with no interest until way down the road. That's immediate relief. It's a real chance to stabilize financially, without the immediate pressure of having to catch up right away or deal with extra interest. It feels much more effective than what we had before.
That really clarifies the new reform. Okay, shifting gears slightly. For veterans maybe thinking about a VA loan for the first time or, just needing a quick refresher, let's step back. How do these VA loans actually work at a basic level? What makes them stand out from, say, a conventional mortgage?
Right. This is where VA loans are pretty unique. The key thing to remember is the VA doesn't actually lend the money themselves. What they do is guarantee a portion of the loan. And it's that guarantee that lets the lenders, the banks, credit unions, mortgage companies offer some really significant advantages to veterans. The big ones, the headlines, are usually no down payment required for most loans and no private mortgage insurance, or PMI. That's unlike a lot of conventional loans. And that's huge, right? Because without PMI, more of your monthly payment goes straight to the principal, meaning you build equity faster.
That no PMI thing, it sounds like a massive plus.
Right.
What kind of difference does that actually make in someone's monthly budget?
Oh, it's significant. PMI on a conventional loan can easily add hundreds of dollars to your payment each month. It effectively acts like a higher interest rate. By getting rid of that, VA loans just make homeownership more affordable month to month. It might mean you can qualify for a bit more house or just have lower housing costs overall.
Okay, but there's often confusion around the VA funding fee. Can you explain that? What is it? Who has to pay it?
Good question. Yes, there is a VA funding fee. It typically runs somewhere between, say, 0.5% and 3.6% of the loan amount. This fee basically helps cover the cost of the program for taxpayers, so it doesn't rely entirely on government funding. The good news is you can usually finance it, roll it right into the loan amount. But here's the really important part. If you're receiving VA disability compensation, or if you have a Purple Heart, you are completely exempt. You don't pay the funding fee at all. And get this, if you become eligible for disability after your loan closes, you might even be able to get a refund for that fee as long as the disability effective date is before the closing date.
Wow, that's a critical detail. Okay, so for veterans thinking about getting a VA loan now, in 2025, what are the steps? What do they need to qualify?
All right, the basics are you need to meet certain minimum service requirements, length of service, type of discharge, that kind of thing. Then you need to get a valid certificate of eligibility, the COE. That proves to the lender you're eligible for the VA benefit. And finally, you still have to meet the lender's own specific standards for credit and income. The VA itself doesn't set a minimum credit score, which is interesting. But most lenders, realistically, are going to look for a score probably in the mid-600s or higher. They'll also look closely at your residual income. That's the money left over each month after your major bills are paid. They want to see you can comfortably cover living expenses for your family, and naturally, they'll want to see a stable job history.
And what about the debt-to-income ratio, the DTI? That comes up a lot with mortgages. How does that fit in?
Yeah, DTI is definitely part of the picture. Lenders generally like to see a DTI below 41%. That means 41% or less of your gross monthly income is going towards debt payments. But, and this is important with VA loans, it's not always a hard stop. Lenders can be flexible if you have what they call compensating factors. These are like strengths in your financial profile that help balance out a higher DTI. Things like maybe having a low loan-to-value ratio, plenty of residual income, extra income you didn't even use to qualify, or just really excellent credit. So if you're worried about DTI, the usual advice applies. Try to pay down credit card balances, avoid taking out new car loans or other debts right before you apply for the mortgage. Little things can help.
Okay. Despite all these great benefits, you still hear myths floating around about VA loans. Let's bust a few of those right now.
Absolutely. Happy to. A big one is that the VA loan is a one-time deal. Nope. It's reusable. Veterans can use the benefit multiple times throughout their lives to buy homes. Another myth is that VA loans take forever to close. Honestly, closing times are often pretty similar to conventional loans, sometimes even quicker depending on the lender and the situation. People also sometimes think you need perfect credit. As we just discussed, the requirements are actually more flexible than many people realize. The focus is more on your overall financial stability. And finally, this idea that VA loans restrict your choice of home. Not true. You can use a VA loan for all sorts of properties, single-family homes, condos, even manufactured homes in some cases.
Great clarifications. Okay, let's zoom out again now. We've talked home loans, but the Department of Veterans Affairs, it's huge, right? Does so much more. We have their FY 2025 budget submission here. Let's dive into that because it gives an incredible sense of the sheer scale of their mission.
It really does. I mean, the numbers are staggering. The total VA budget request for fiscal year 2025, it's $369.3 billion. Just to give that some context, that's almost a 10% increase, 9.8% over the 2024 estimate. It's massive. And breaking it down, $235.3 billion is mandatory spending. That's up over 21%. This covers things like traditional benefits and also includes $24.5 billion just for the cost of war toxic exposures fund, the TEF. Discretionary spending is actually down a bit, 6.2% at $134 million. And across everything, the VA expects to have about 448,000 full-time equivalent employees in 2025.
Wow. Those are truly enormous figures. So where's all that money going? What are the really key areas in that budget that will directly impact veterans and their families?
Yeah, it's crucial to see how those billions translate into actual support. So first, maybe the biggest area right now is healthcare and toxic exposures. The PAYCT Act from 2022 is still driving huge changes here, expanding care and benefits for veterans exposed to toxins. The real story is access. In 2023, they screened a record 4.5 million veterans for toxic exposure, over 361,000 newly enrolled in VA healthcare. That's huge growth. And a major development just this past March, they fast-tracked part of the PAYCT Act, Section 103. This means any veteran exposed to toxins or hazards during service, Vietnam, Gulf War, Iraq, Afghanistan, other combat zones, even domestic exposures like chemicals, lead, asbestos, they can now enroll directly in VA healthcare. You don't have to apply for VA benefits first anymore to get into the healthcare system if you had qualifying exposure. The Toxic Exposures Fund itself is providing $21.5 billion just for medical care in 2025. It's a fundamental shift in access. Second big area, mental health and suicide prevention. This is stated as the VA's #1 clinical priority. We're talking $17.1 billion for mental health care, plus another $583 million specifically for suicide prevention outreach efforts in 2025. You can see the need and maybe the success of outreach. In the Veterans Crisis Line numbers, contacts were up over 15% in 2023. Over 1 million calls, texts, chats. That's incredible volume. The budget also puts $713 million towards opioid prevention and treatment. The whole strategy is shifting towards a broader public health approach, recognizing suicide is complex. It's not just a clinical issue. Third, ending veteran homelessness. They're putting $3.2 billion specifically into homelessness programs, and they're seeing results. In 2023, they permanently housed over 46,500 homeless veterans, beating their goal by more than 22%. For 2025, the goal is even higher: house at least 76,000 unique veterans and prevent homelessness for 90% of those identified as being at risk. Programs like HUD VAHH continue to be key here.
That's incredibly important work. Stable housing is just fundamental. What about getting veterans the benefits they've earned? Streamlining that process.
Absolutely critical. So, fourth area, benefits delivery and modernization, handled by the VBA, the Veterans Benefits Administration. They delivered a record $163 billion in earned benefits in 2023, processed nearly 2 million claims. That's almost 16% more than the year before. A huge workload increase, largely due to the PCT Act. So the 2025 budget gives VBA $4 billion for operating expenses. And interestingly, there's $2 million earmarked specifically for artificial intelligence for AI. The idea is to use AI to automate parts of the claims process right from submission to the decision. The aim is faster, more accurate, more consistent decisions. And they're also focused on mitigating bias in AI through, careful data work and auditing. The big goal here is to get that backlog claims older than 125 days way down. It ballooned to over 400,000 in 2024 because of PAYCT Act claims. They want to get it back down down to around 100,000 in 2025 using these tools and processes. It's all about efficiency and fairness for the veteran. Fifth is infrastructure and technology. VA plans to invest $2.8 billion in construction, expanding facilities. Big projects include a new critical care center in West LA, more mental health space in Dallas. But interestingly, the budget for the electronic health record modernization, the EHRM program, is actually cut pretty significantly, down 52% to $894 million for 2025. Now, they say this isn't backing away from EHRM, but more of a strategic pause. They want to optimize the sites where it's already deployed before rolling it out further, make sure it's working right. Overall, IT systems still get a big chunk, $6.2 billion, focusing on things like cybersecurity and training the IT workforce. Sixth, the appeals process. The Board of Veterans Appeals, BVA, handled a record number of appeals in 2023, over 103,000. That's up more than 8% from 2022. They're aiming for 118,000 appeals processed in 2025. And here's some good news. That backlog of really old appeals, the legacy ones, it's projected to plummet from over 33,000 in 2023 down to just over 3,300 in 2025. That's huge progress. Although requests for higher level reviews are expected to keep going up, maybe hitting over 257,000 in 2025, so the nature of appeals might be changing a bit. Seventh, focusing on women veterans' health. The budget earmarks a significant $13.7 billion for healthcare for women veterans. Within that, $1.1 billion is specifically for gender-specific care. This covers things like improving maternal health, boosting access to infertility counseling and IVF-type services, and getting rid of copays for contraception. It reflects the changing demographics of the veteran population. Eighth, research and oncology. VA is putting $260 million split between research programs and medical care funds into precision oncology fighting cancer. This ties into the president's cancer moonshot. They're focusing on better treatments for common cancers in veterans, like prostate and lung cancer, but also expanding. And there's $59 million specifically for research into military environmental exposures, connecting back to the PASS-ET Act. Ninth, staffing. Now, overall, VA employment is projected to dip slightly in 2025, about 10,000 fewer full-time positions in 2024. But context is key. They actually had record hiring in 2023, brought on over 61,000 new staff, up 7.4%. So the focus seems to be on speeding up hiring and training in critical areas like mental health, even if the overall headcount adjusts slightly. And finally, 10th, memorialization. The National Cemetery Administration gets $495 million to run and maintain its 158 national cemeteries. The goal remains providing 95% of veterans with a burial option within 75 miles of home. They expect to be at about 93.8% coverage in 2025, with the total number of grave sites reaching almost 4.4 million. It's about ensuring dignity and honor and perpetuity.
It is just truly incredible when you lay it all out like that. The sheer scope of the effort, the resources involved, and the direct impact on veterans' lives. It really is a monumental undertaking, far beyond just one or two programs.
Well, we have covered a lot of ground today. We've journeyed through, the really complex but absolutely vital world of VA benefits and funding, from the very personal changes to mortgage relief, helping people stay in their homes, all the way up to these massive national healthcare initiatives, the tech investments like AI. It's a huge interconnected system.
It really is. And what strikes me is how you can see this clear commitment from the VA to deliver more care, more benefits to more veterans than they ever have before. These big budget numbers, the legislative pushes like the PASS-ET Act, they really underline that. Of course, there's always that careful balancing act, right? Dealing with the challenges of actually implementing all this while meeting ever-increasing demand. Yeah, absolutely. And thinking back on everything we discussed, one thing that really jumped out at me today was that specific investment in AI for claims processing. Dedicating $2 million just to automate parts of it, but also specifically aiming to audit it to mitigate bias. That feels like a really significant, maybe even forward-looking approach to getting benefits delivered faster, but also more fairly.
It certainly does. And maybe that leaves us and you listening with a final thought to chew on. With these major shifts in law, these huge financial commitments we've talked about, how might all this actually reshape what we even mean by veteran support in the years ahead? And thinking beyond that, what other innovations, what new collaborations could really maximize the long-term impact for every single veteran and their family? Something to consider.
Definitely something to consider. We really hope this deep dive has given you a clearer, more complete picture of these critical developments. Thank you so much for joining us.